Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. So let's get right to it, shall we? First one up is TOST. And it's not toast as in it's a bad thing. It's toast as in it's great. Who doesn't love buttered toast? TOST is the ticker. It's a Zacks Rank #1 strong buy. A for growth, F for value, as all my aggressive, not all, but most of my aggressive growth stocks will have. I like to see a strong growth score and a weak value score that tells me right away I'm on the right path. All right, so Toast provides that payment system for restaurants. You might have seen it now. They, instead of dropping you a check, they just leave you this little tablet. It'll show you what everything costs. And it's a great thing. Servers tend to love it. Restaurants love it. But do investors love it? That's the key. We're at a $20 billion market cap, and we've got a forward PE that is super, super high, but it doesn't really matter, does it? Does it matter? It sure does. 2,600 times earnings. So earnings have really got to start turning around and getting really good here. So we've been doing good. We get an earnings event right here. That arrow tells me it was a strong beat, and the stock just kept on rolling. All right, let's take a look at all the numbers that we love to look at when we take a look at any stock. Are you beating the number? 36%, 6.5, 200%, 600%. And here's your big swing here. Losing 7 cents, losing 15, shoot to profitability when they were expecting a loss, expecting a little tiny gain, and a big gain of 7 cents. So that's what has sent this stock off to the races here. What are estimates doing? Because the Zacks rank is all about the estimates, as we can see. Moving up from a penny to 6 cents for this quarter, moving up from 4 cents to 5 cents from next quarter. The full year, instead of being a loss of 10 cents, is going to be a gain of 2 cents. That's good to see. And then 28 cents running up to 39 cents. So estimates all moving up. Let's take a look at our growth. How is our growth going to continue here? We got 27% this year. We're looking at 6.1 billion and 24% next year. So those are big sales numbers. So with big sales numbers, you would want, and a continuation of good growth, 26% on top of that, you're going to get a big PE. But this is a super huge PE. But that will correct itself over time when these numbers start flipping from negative to positive, and it looks like they're moving at a good rate here. These are operating margins. Go from negative 6% to negative 3% to negative 1%. We'll probably see that 1 or 2% in the next quarter. And that means earnings are going to be much higher. Price to book at 13 times is a little rich, but I still like the idea here. Let's take a look now at the chart, see where things have gone. All right, Toast came out in IPO session late 21 to some fanfare, and they really had a big time price there. But the tech wreck of 2022 certainly didn't help it, especially this miss here that kind of confirmed a lot of people saying, geez, is this really worth it? And so it hangs out for about 2 years in this 15 to 20 range, upper 20 range, and all of a sudden we've got a breakout and we're heading up. And as we look at, and clear some of my squiggly lines, if we look at just the distance between these lines here, that tells us there's good earnings growth coming, or at least expected, in 2025 and 2026. So that is TOST. TOST is the ticker. All right, on to our next one. It is Viking Holdings, VIK. Viking, it's a Zacks rank #1 strong buy. B for growth, F for value. It's a transportation and shipping name. And since I scribbled that out, I can clean that off. Let's go ahead and take a look real quick down. Let's take a look at our market cap. We are pretty big at $20 billion. If we look at this chart just over the last little while here, we can see that it's really moved quite nicely. Yeah, try it one more time. There we go. Look at that. It's like a 45-degree angle on that stock. And if we back out for the 1 year, boy, I'm in trouble today. Back out 1 year, we can see this stock, a very recent IPO, and just straight up and away. How about that? All right, Viking. Let's take a look at the numbers. I don't think there's going to be a lot because I only see 3 quarters there. And we didn't have any earnings there, but we had, coming in negative. Then we have a gigantic number. Sometimes with these negative, these first quarter, they're carrying forward all the losses that they had when they were a private company and sticking them on the books. and kind of getting the ship right, if you will. Obviously, the market thought there was going to be a much bigger loss. But then we have a 76-cent gain versus 69. That's good. And 89 versus 83. That's good. So you're off to the races right away. Shipping. How are the estimates looking? All right, little mixed bag here. So we're going to go from 37 cents down to 35 cents. So that's 2 cents the wrong way. And then the first quarter of next year is going to be a loss. But the loss is moving in the right direction. Instead of 30 cents, it's actually moving up to a loss of just 26 cents. This year is just about done, but we've seen it has moved up from $1.28 to $1.33. And next year, you're going to go from 208 to 227. So that implies a pretty hefty earnings growth of 71%. I saw that number right here. So I just didn't want you to think I was just doing that kind of math in my head. I'm not that good. All right. Why do we like this stock? We like it for accelerating revenues. 3.6% growth this year, 4.8 billion in sales, 5.75 billion next year, 17.7% sales growth. That is the type of stuff that gets you excited for an aggressive growth stock play. All right. And it's trading at 34 times earnings right now. It's a little bit rich, maybe, but not terrible. With 11% growth in the most recent quarter. We don't have a price to book, but we do have a price to sales of almost 4 times. It's a little rich. We see margins starting off really negative, and you're gonna head higher here because you're earning money. That's going to be the way that I see that one. So I think that's a good one to watch. Obviously, there's nothing to see here on a long-term chart, but big time earnings growth between these lines. Definitely a name to keep on your aggressive growth radar screen. It's Viking Holdings, VIK, obviously a little bit bigger than most of my stocks. All right, that's it for this week. Be sure to join me next week when I look at 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to zacks.com/promo to check out all of our latest promotions.